As traders, it is paramount for us to characterize correctly what type of market structure we are being offered. Because every type of market structure is traded slightly differently, we still apply the same price action rules, but our approach is slightly different. Trading range is traded differently from downtrend or uptrend. Now, why am I talking about this? I'm talking about it specifically because today was FOMC announcement day. A lot of times, FOMC announcement days tend to produce a very slow consolidating structure the very first half of the day before the news come out. This is very typical. The traders are waiting for the news to come out and they're not really taking any positions in the market. So it is very common for you to just sit here, observe a slow trading range. This is exactly what's going to happen. So we're going to go through the structure today. Okay, so right now I can see uptrend played out to break new high. You will push down with the overshoot and we're back above the EMA. So structure is not that clear. Uptrend played out. So I'm going to follow the shortened channel. Okay, I'm trying to locate the shortened channels and follow them. We have a new high. You have a first entry long. So what I'm thinking about, possible second entry long at the EMA. Small two-legged pullback didn't form. We have a new extreme. I'm going to reset the count and we have another two-legged pullback. Now, why are we thinking about second entry long again? Because this uptrend right now has a break and we expect new extreme according to trend line rule. Now, to an on-trend eye, it may not be as obvious that there are channels being present on the chart. You just see a bunch of candles working higher or lower, but there are small channels or big channels being present on every single market. When the structure is sideways, you're looking mainly for tighter channels. And when the trend is starting to be substantial, this is where wider channel is going to come into play. And this is what we're going to discuss in today's lesson as well. So this is why we're looking for two-legged pullback, because we expect new high. It is at the EMA, but the signal bar is quite neutral. You can see doji bar, bearish body, I cannot take it, and market created new extreme. Now what I can see is that our supportive indicator is flattening a lot. And because this channel played out, I'm kind of starting to predict potential trend range, something like this. I'm going to copy it, put it at the bottom. It fits quite nicely at the bottom. Now it continued working higher. But price action is right now confirming the bearish bias. Now, as you can see, this is exactly the structure you can anticipate when you're trading FOMC announcement day. So you gotta approach this very carefully. You cannot be too anxious to take a setup. You cannot jump the gun, especially on a day like this. Now, our downtrend has a break and a new extreme. Now, why is that important? It is important because right now I have to stop thinking about selling. Small consolidating structure was established at the upper portion of this chart. And what I can see, I have first leg down, break, second leg down. And we're at the bottom of the trend range where most buyers will step into the market. Okay. We have a high low here. Confirmation of the failed breakout. You know, I can market more aggressive. When I was watching this live, I really wanted to see the push above EMA and a failed second entry short. But since you traded up into this consolidation, your bias is mainly bullish. So I'm going to market a little bit more aggressive high-low confirmation of failed breakout, because as you know, according to price action trend range rules, most breakouts will fail, especially if you have a large two-legged pullback. I'm going to redraw my channel wider. I'm not going to draw it tighter. I would draw it tighter if I expect this to be correction of wider downtrend. I'm not expecting wider downtrend. I expect reversal to the upside due to trend range rules. And one trader asked me about shorting a second entry short here. Now on my chart, there is no break below this bar. You can see they're matching lows. There is no break. But had there been a break, can you sell? You cannot. This channel is too broad for this trend range structure. You can see you have already a large two legs down and you have trend range structure. Notice how EMA flattened. You can't just zoom in on this second entry short. You can see EMA completely flat. You have move up, move down, move up, move down. So this is clearly a trend range structure. And this is FOMC day. So I'm really following the shortened channels. I have large two legged pullbacks. So I'm drawing my channel wider. Can I get a failed second entry short? Okay, by the time I get a failed second entry short, it is here. But it is below EMA and the signal bar is horrible. Bearish bar. Even though we expect failed second entry short, I can't take it, and uptrend played out. So nothing really clear. Everything is stacked. I cannot go long, just first entry long, not really touching the support. I cannot really sell. But you can see that the buyers are struggling to break higher. Now you can see lower highs, nothing is clear. Uptrend working higher. We have small trend range here. So this is just neutral bias. Price action is working lower. Nothing I can do. I can just follow the price action with my shortened channels. Remember, everything needs to align if you want to find high probability setups. The context, key entry point, and the setup needs to be good. So what is the context? Well, you feel that this is a rangey market. This is a trend range market, but you have somewhat of a bearish imbalance. And your tendency may be to look for wider channel something like this, but this is super wide for a channel like this. You don't really want to be drawing this. So follow the short-term channels. At this point, I'm more bullish, but I just cannot go long. There's no key entry point, nothing. Okay, downtrend played out with the break new extreme. Okay, now we have a new low. You have a first entry short, pullback, second entry short failure. And this is interesting. Fell second entry short. Can you take it? Notice you're back at the support. Of course you cannot, because there's still a gap between the EMA and the body and even the tail. The candle is still not full at the EMA, so when I see this, I want to see second entry long. And prices created second entry long, new high, first entry long, pullback, second entry long. You're back at the key entry point, you're close to the EMA, the uptrend is new high, and this is a decent high probability setup to take. This is a decent high probability setup. I'm going to mark it second entry long. It is continuation of the failed second entry short. You keep your stop loss one tick below the signal bar, and you can see you would have gotten stopped out by one single tick. And later on, it created a triple test. So like a one bounce here, second bounce, third bounce, and for more visual, we can see bounce here, bounce here, bounce here. If you took this right here, I can see why. You had a losing trade, that's okay. Nothing is perfect in price action. You can take this triple test if you hadn't entered, or you can re-enter after you getting stopped out in here. And market continued working higher. And this is right now, you can see we're entering the FOMC news announcement section. I don't recommend taking a setup, let's say 1 hour before the FOMC. This is around the 1 hour, and you can see how slow it is. Don't take setups 1 hour before FOMC announcement. And after it comes out, wait, let's say 30 minutes, monitor the volatility, because this is really high impact news, and high impact news cannot be taken lightly. You definitely don't want to be taking the news. You don't want to be gambling. You know, sometimes traders, they want to place a buy order and sell order, hoping if it goes in one direction, the risk to reward will carry them. But a lot of times it will end up whipsawing you, stopping both of your positions and then going in either direction. It is better off just sit on your hands. Don't trade the news. It is too dangerous. You can get slippage because your stop loss can get a slippage. There's too much volatility. Just wait it out. So you can see this is typical first structure before FOMC. Slow, consolidating, unclear market, low volatility. I was just sitting on my hands. I didn't take any setup in this because it is just not worth it. Super slow. I already know better that I don't want to take losing setups. Right now you can see the FOMC came out and volatility happened. Now, when you're watching this live, today specifically, you know how super volatile this was. Now, when you're watching this as a review, everything is obvious after the fact, but when you're watching this live, everything was forming super fast, volatility was crazy, unclear bias. So this is why I recommend just waiting this super sketchy area out. It is too volatile, so I'm just being patient. And finally, price action is getting a little bit clear because we can see that the resistance is coming into play. Sellers are stepping into market, and we are creating right now series of lower highs and lower lows. So we have downtrend working lower. We have a new low, first entry short, second entry short. Why am I counting for second entry short? It's because we expect new low for this downtrend, but we are above EMA. Uptrend played out with the break new extreme, and this is clear visual to like a pullback that will indicate that the correction played out. Okay. Lower high confirmation setup, unfortunately didn't close below EMA and still doji, so we can't really take. We have a new low, first entry short, pullback, another second entry short. And right now we can see that we have series of lower highs every single time. This downtrend needs to get new low, but there was first leg even prior to this downtrend. So if I'm gonna draw potentially a wider channel, you can see how many confirmations I'm getting. I can copy, put at the bottom. Now, if you don't have this channel in play just yet, that's okay. You still expect new low. You can see the uptrend played out with the break new high. So you're not really looking to go long. Okay, you have clear broad two legs. You can see every single major high is lower and lower. You have micro new low, first entry short, pullback, second entry short, another two-legged pullback, first entry short, pullback, second entry short, and this is a great high probability setup to take. Second entry short at the key entry point, and market continue working lower, and notice how far the push phase is working lower. So at this point, you have to redraw wider downtrend because this is right now getting to be a substantial downtrend. And when you're observing a trend in market, you have to remember the market can never go straight down. Okay, there's profit taking. There are a lot of buyers trying to pick the bottom looking for reversal. Most reversal attempts will fail. So there's always a push phase, correction phase, push phase, correction phase, push phase. And right now, what do you expect? You can see we're closing very close to the trend channel line. So most likely we're going to get correction phase. And it is important for us to know that this is going to happen, because if we can identify the fact that the correction phase is over, we can take advantage of the market structure and locate a high probability setup. Okay, just like it happened right here. And how do we know that the correction phase is going to end? That's the important question. We use the short-term channel. If there is a break in your extreme, you expect bullish depletion. And if it's going to form two-legged pullback at the key entry point, that's a sign that the sellers are coming into the market again. And notice what we have. New low, first entry short, pullback, second entry short, first leg up, break, second leg up, and uptrend played out with the break new extreme. So everything is telling you that the correction phase is depleting. This is a second entry short off the key entry point, and there's going to be a break below this bar. There's going to be a high probability setup, and there's a break below this bar. So this is a great second entry short, high probability setup. Market continues working lower. Now we have lower high confirmation setup. When I'm watching this live, this is a little bit congested, 1, 2, 3, 4 bars stacked right next to each other. But what happened here is important, and this is where nuance comes into play. This setup didn't trigger at first lower. Okay, it first work higher, break above this bar high, confirm the key entry point again. All sellers step into the market and reverse working lower. So this is sort of like a double rejection. You have first lower high here and a second lower high where it technically triggered lower. So because this is showing such a great momentum, another bar, great tier 1 signal bar, you can consider working lower. It is at the key entry point, correction phase ended. You can see how nicely the lows are getting respected by the channel. You have a failed second entry long here, but unfortunately you're selling the very low today. I needed to see the failed second entry long from a little bit higher, and market continues working lower. Okay, I cannot sell first entries far away from the EMA. Okay, I'm going to redraw the short-term uptrend. I have a new low first entry short. I have a second entry short. I cannot sell below bullish bar. I cannot sell if there is uptrend in play. And you can see just like here, you're very close to the trend channel line. So you expect the correction phase to create a new high, the second leg. Okay, you now have new extreme, but I cannot just sell randomly without any key entry point, just in the middle of no man's land. Now we're bouncing off the key entry point right now. Another key entry point is coming into play. It is a second entry short, sort of. So you can consider, but what I like doing more is waiting for clear high probability setup. And this is now confirmation setup. Similar scenario what happened here. We're at the key entry point, break lower, lower high confirmation setup, great lower high. With one exception, it is way too late in the day. The market is about to close. So this is marked only as an educational setup. You can see price action continue working straight to the close. Always make sure you know what is the overall structure, because you can clearly see the downtrend working lower is traded differently than the consolidating structure before the FOMC announcement day. So this is typical FOMC structure, very low volatility price action prior to FOMC, and after the announcement is out, a lot of times the volatility increases, and this was pretty much textbook downtrend to trade. You can see the key entry point is coming into play every single time. The two-legged pullback high probability setups are extremely reliable. Just have to be patient, not to jump the gun during a structure like this where it is completely unclear and very low volatility. So I hope you had a good trading day. I'm gonna wrap it up and I'm gonna talk to you next time. Good luck with your trading.